Ever wondered what actually happens to your tax money after you pay it? Well, today, we're going to follow the journey of a single rupee through the incredible, complex maze of India's public finance system. It's a story of checks, balances, and a powerful system designed to hold the government accountable. So, let's dive in.
You know, it's a question we all ask. Where does the money go? Well, that rupee, it doesn't just disappear into some big government vault. Nope. It starts this amazing journey through multiple accounts. It needs approvals from Parliament. It goes through super strict audits. All of this is designed to make sure every single paisa is accounted for. So, come on, let's follow the money.
All right, so the very first stop for our rupee isn't one giant bank account as you might think. It's actually better to imagine the government is having 3 different wallets. And each one of these wallets has a very, very specific job.
Okay, so here they are. All government money, every last bit of it, flows into one of these 3 funds. First, you've got the consolidated fund. Think of this as the main treasury, right? It's where all your tax money goes. Then there's the contingency fund. That's the emergency stash, the break glass in case of a crisis fund. And finally, you have the public account. This one's a bit different. It acts more like a bank, holding money that the government is just safeguarding for its citizens, like your Provident Fund savings.
Now, of those 3 wallets, this one, the consolidated fund, is the big one. It's the most important. It holds all that tax revenue, and it is locked down tight. The only key belongs to Parliament. And that one simple rule, that not a single rupee can be spent without the approval of the people's elected representatives, that is the absolute foundation of financial democracy in India.
So our rupee is sitting in the main fund, but it's not going anywhere just yet. To get it out, the government needs permission. It needs a green light from Parliament. And this process, it's not just a rubber stamp. The legislature actually has control over both the planning and the spending of our money.
And what's really interesting is that not all spending is treated the same. Most of the budget is what we call voted expenditure. That means it's debated, discussed, and literally voted on by Parliament every single year. But some really critical expenses are charged directly to the fund. No vote needed. And you might ask, why? Well, it's to protect the independence of key institutions, like the Supreme Court. It makes sure their salaries and how they operate can't be used as a political football. This really gets to a core difference in thinking. See, a company's books are all about one thing, right? Profit. But the government, well, it isn't a business. Its accounting isn't designed to show a profit, it's designed to prove accountability. It's built to show you, the taxpayer, that your money was spent wisely and for all the right reasons. Okay, so Parliament has given the thumbs up and the money has been spent. But the story isn't over yet, not by a long shot. How do we, the public, actually know it was all spent correctly? That's where the financial watchdog comes in, the independent guardian of the public purse. And this guardian is the Comptroller and Auditor General, or as it's better known, the CAG. Now, this isn't just another government office. This is an independent authority created by the Constitution itself. And to make sure they can do their job without any political pressure, the CAG has the same high status and the same very difficult removal process as a Supreme Court judge. This quote perfectly sums up the CAG's whole mission. The best way to think about them is as the eyes and ears of Parliament. You see, once Parliament sets the financial rules and approves the spending, it's the CAG's job to go in and make absolutely sure that the government actually followed those rules, right down to the last letter. And the CAG's reach is, well, it's enormous. They don't just audit the big government departments. They check everything. They scrutinize tax collections, they go through the finances of public companies, and they even check the physical stock of government supplies in an office somewhere. Their job is to verify the integrity of the entire financial system.
Now, all this talk about the CAG brings up a really crucial point. What's the difference between accounting and auditing? You know, we hear these terms all the time, but they represent 2 totally separate and vital functions that, for the system to work, have to be kept apart.
Here's probably the easiest way to think about it. Accounting, that's the process of writing the financial story. It's recording every transaction, every rupee in, every rupee out. Auditing, on the other hand, is the independent fact check of that story. The auditor comes in from the outside, after the fact, to make sure the story being told is actually true, and keeping those 2 roles separate is absolutely essential for public trust. I mean, the guiding principle here is really simple. You can't audit your own work. The person who writes the story can't also be the one to fact-check it, right? It just wouldn't work. That's why, way back in 1976, these 2 jobs were officially separated in India's union government. The individual ministries handle their own day-to-day accounting, and the CAG comes in later to perform that completely independent audit.
So let's recap. Our rupee has been collected, it's been approved by Parliament, it's been spent, and now it's been audited. But what happens with that big audit report? Well, this is the final and maybe the most important step where the entire process comes full circle in what's known as the accounting loop.
So, here's how that loop works. First up, the government's executive branch goes ahead and spends the money, just as it was approved in the budget. That's the action phase.
Then, the independent CAG steps in. They audit all the accounts, they examine all the records, and they make sure all that spending was legal and proper.
And finally, and this is the real kicker, the CAG does not give that report back to the government it just audited. No way! Instead, that report goes directly to Parliament, completing the circle.
This quote just nails it, doesn't it? Without audit, no accountability.
The same body that approved the spending in the first place, that's Parliament, now gets to see the independent report card on how that money was actually spent. This gives them the real power to hold the government truly accountable for its actions.
And just like that, our rupee's long journey ends exactly where it started, with the people's representatives in the legislature. This complete cycle, this closed loop, is what ensures democratic control not just over approving the spending, but over verifying it too.
So, there you have it. This whole system of separate funds, legislative control, and that powerful independent audit, that's the engine of India's financial democracy. It's a fantastic framework designed from the ground up to ensure every single tax rupee is accounted for. But of course, it leaves us with one final, critical question. A system can be perfectly designed on paper, but is it working as intended in the real world? And that right there is the constant challenge of public accountability.